Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, July 30th. And what a crazy week we had last week. Monday, Tuesday, Wednesday, skies falling. News coming out of Europe was just continuing to be worse and worse. And then, of course, Draghi comes out with a big statement stating that he's going to do whatever he can to keep the euro in place. Markets rallied on Thursday, followed through on Friday with weak volume, as we know. We are in the summer doldrums here. Again, it's going to get worse, guys. So we did get a real turnaround Thursday and Friday. Actually, kind of amazing turnaround, and without any warning. So if you're bullish, that's great. Or if you're a long-term investor, we do have a lot of people follow us in long-term investing. That's also good as well. Now, I did mention 2 weeks ago on Thursday, said if you haven't looked to hedge your shorts, and we did have that nice sell-off, I would encourage to do so again if you have not done so. We are at a conflection point right now, and we've hit some pretty decent targets virtually in 2 days. We went up very hard, very strong for the last 2 days. And most of the indices were their culprits here. A lot of the bigger names followed, but a lot of other stocks really didn't do much. So that's also a warning sign. There's tons of market divergences, which I want to go over and I want to get started with. But we want to really emphasize that, again, checking that hood, looking under the hood, there's a lot of cracks in the walls. Now, that does not mean we go out and short the market. Absolutely not. We're trend traders. We follow the trend, and we stick to the trend until the trend changes. That doesn't mean you can't put out a few hedges, a couple of shorts in between your longs. But when you're day trading, obviously, we want to stick to the general thesis of the trend for the day. We don't like to be fading tops or bottoms unless it's a climactic big gap up, big move higher real fast for the day, and then, of course, a sell-off. But again, that's only for experienced traders. And so let's move on. And we're gonna have earnings continues to come in, and we're gonna have a lot of earnings come out this week, and it's been either great or it's been horrible for these for companies that report, and they've been punished and or rewarded. So really, it's not telling me much. A lot of analysts have brought down estimates, so you got to look at it. Oh, we beat, but we did bring down the estimates, so it's a little bit wishy-washy. Now, there's going to be 3 major events going to dominate this equity trends this week, and one being the FOMC announcement on Wednesday. That's going to be extremely closely watched. The Fed was hinting that they would be taking action on QE3, and obviously the market thought that he was real serious about it. So that's Thursday and Friday, as you know, that big move up. If, in fact, he does not deliver, look out below, because this is all priced in. I actually think that if the market does, if he does say that, we're going to do this, we're going to do that, I do see, maybe a day or two of follow-up, and I also think that's priced in, too, as well. But again, we're looking to really react what the markets tell us. I'm not looking to anticipate right now. Too dangerous to do so. But I do think either way we get some sort of a small sell-off, maybe a shallow pullback, really test the highs, and then look to sell off again. Also, we have Draghi, as you know, with his statements, so we're going to see if he's really serious about any kind of action that he takes this week. And, of course, we have the July unemployment data coming out the first Friday of every month. That's also going to be big. But if we do get a little change, an up change in jobs, that for the better, then I think the market rallies as well. So we have a lot of iffies here. I personally would not like to be holding anything until this market really comes in tune and in sync with everything that's actually moving. We like to see markets moving. I like to see tech, semis, financials moving higher, making higher highs, and I don't like to see utilities and bonds moving up as well. So that's something that's concerning to me, and that's something I'm going to point out in this video. So let's get into the video. Let's get into the charts. And as you can see here, I put this every once in a while. Here's the Shanghai. The Shanghai continues to make new lows as our French CAC, the London FTSE, the German DAX, and the S&P. These are all the European counterparts. They're all moving up higher, while the the Shanghai, is moving lower. Okay, very concerning to me. I do think that eventually something's going to give and it's going to play catch up. But again, guys, we really doesn't mean we can't be in the markets. We just need to reduce our exposure, manage our risk properly, and take trades that are really apparent, that's real easy and that looks very obvious. That's the only thing. And if we don't trade for the day, we don't trade for the day. Until the market gets better, there'll be plenty of opportunity and plenty of time to get real busy in the markets. Okay, so let's take a look at our bar chart momentum index. Big up in the nosebleed section, as you can see here. We had a big move on Friday, and this is something that's telling me, wait a minute, we're overbought here. I'm going to be looking to scale back on longs or tighten up your stops during the day, because any day, at any moment, we can get a reversal. Now, we're down about 5 handles in the S&P, really not much. That could change quickly during the market as the market opens, but just kind of keep an eye on that. Now, our NYMO, our McClellan oscillator, back above the 16 area, not really reading overbought, but we did come from here down 50 to up 16 in the last 2 days, so that's something to take note of. But again, not giving me a real big solid overbought reading, as well as the did the bar chart momentum indicator. But if we look at our 50-day stocks above the 50-day moving average, way up in nosebleeds, that's giving us a big overbought reading. We also have the S&P 200. Again, giving us an overbought reading, and stocks that are above the 200-day moving average. So a lot of indicators pointing lower. And if you mentioned on Friday, I said the NASI, the weekly 5-3 stochastics, gave us a sell signal on Friday as well. Okay, I mentioned that. I showed that chart on Thursday actually. Friday there was no morning call, but nothing has changed from there to from Friday till to Monday. Still giving us a sell signal. Let's take a look at our VIX indicator. Now, bullish fallen wedge, or if you will, a bull flag. Anytime you break out of this pattern, you usually get a back test. Now, this could be holding as support now. Instead of this area here, we have the upper trend line holding support. This could now catapult the VIX higher, and which would give a buy signal to the VIX and a sell signal to the markets. So that's something interesting that I wanted to point out. And lastly, I want to point out our ratio charts, our S&P to the financials, to the semis, S&P to copper, S&P to transports. Okay, but before we do that, I just want to show you the XLU. This is the utility sector ETF. If the market was extremely healthy, a lot of investors, the longer-term investors now we're talking about, wouldn't really be running into these into the XLU utilities. Yeah, they do produce a great dividend, but nonetheless, if risk is on, you'd want to see the small caps lead, which they're lagging, and I'm going to show you that in a moment. Now we'll get right into it. SPX and the copper. Higher high, higher high, higher high. Copper, lower high, up, lower high. And you could even see this as a pattern looking like a head and shoulders pattern here, while the S&P continues to go up versus copper. All right, you want to see copper lead. Copper leads the S&P by far. As of right now, this is leading. I don't see, if copper doesn't start picking up soon, I just don't see the S&P continue. Now, can we go to 1400? Absolutely. And if you remember, guys, we had the inverted head and shoulders on the 60-minute pattern, hit our target at 1390. So that pattern is complete. Now, do we get back up here 1420? It is very possible. We're only about 25 S&P points away. That's one day, and then I would see us really sell off here. Or we could just cap it right up here, keep it top, and then roll from here. So this is going to be interesting to see what happens in the next couple of days. Let's take a look at the S&P in the transportation sector. Again, very concerning. Higher highs, lower highs. Transportation sector, you want to see them lead the S&P, not S&P lead the transportation sector. And as you can see here, our S&P transportation ratio, higher, starting to roll as of right now. So that's something that's also concerning to me. Another one is this large cap, which is the S&P with the SOX semiconductor index. Lower highs, higher. Again, the theme remains the same. This is not. I'd like to see the SOX making higher highs versus the S&P. Banking index, last one, same thing, as you can see. So this is a very concerning, very concerning what I'm seeing under the hood, so to speak. Let's take a look lastly on the dollar. Now the dollar is going to give away, obviously, the S&P rally. It's totally inversely correlated, but this is something that I want you to keep an eye on here moving forward. If the dollar can pick up a little bit of momentum, I would think that you'd see you'll see definitely the market sell off here. So this is basically what I'm saying is that I like the market. I don't mind the market moving higher, taking day trades, getting long. As far as swing trades, you got to be really cautious here with your swing trading. If you're looking to get long, I'd definitely be putting on some hedges. Now, lastly, seasonal influences on equity markets usually turn negative in August, meaning the first 2 weeks of August is really worse than the last 2 weeks of August. So something to keep an eye on. This is from the Track Race 2012 Investor Guide. I like to look at seasonal tendencies, very important. So we really need to keep an eye on that. Do we look to the market sell off here and then rally into the fall? Very, very possible. Again, it is an election year, and the Fed is doing everything it can to keep this market up. So you really need to keep an eye on that, and not just blindly short the market. Okay. All right, guys. Let's see what happens this week. Let's see what happens today. If we get a little bit of follow through, the market is way overbought here at the moment. So a logical pullback will be healthy for the markets for a chance to possibly pop one more time, at least test those highs at a 14.20 area. Okay. And we'll see what happens today, and I'll talk to you tomorrow. Have a great day, everybody. Take care.